Let's also talk about a big loser in today's trade, and that continues to be Protean eGov, because that stock is locked in lower circuit of 20%. E-governance solution provider, this company slumped after not being shortlisted by the Income Tax Department to design and develop the PAN 2.0 project. The company had participated in the RFP bid proposal for the project, which was for technology revamp, including design, development, implementation, operations and maintenance of the PAN systems. Now, earlier in the day, the company also had their con call wherein they have gone ahead and given the reassurance that missing out on this project is not going to have a major overall impact on their PAN segment. But this statement coming in from the management also has not brought in any respite for the stock, because that continues to be locked in 20% lower circuit. Let's go across to Varun, who's joining us once again with the details of what losing out on this bid could mean for the company going ahead.
Definitely. So it's a big blow for the company because, see, if you look at the Income Tax Department has actually issued a notice for request for proposal for the PAN 2.0 services, and the company has also participated in the request for proposal bid. But the company was actually not shortlisted by the Income Tax Department. In fact, the Income Tax Department has said that they do not consider the company favorable for the next RFP selection process. Now, if you look at the overall PAN 2.0, it had a financial outlay of around 1440 crores. If you look at the overall PAN business, it has a significant contribution to Protean eGov overall revenues. It contributes around 50% to the company's revenues, and Street was expecting that the company would get a good amount of business from the PAN 2.0 service, but the company has not been shortlisted. Now, analysts on the street are actually expecting that this would create medium-term uncertainty on the PAN business. In fact, they are saying that for FY26, the impact might be muted, but they expect significant collapse in the overall revenue streams in the next 2 to 3 years. And also, they are seeing a big decline in the overall revenues in FY27, because if you look, this overall PAN business is actually also contributing to the overall cash generation of the company, and the cash generated from these services could have been used for new initiatives. So actually, not getting shortlisted for PAN 2.0 creates a big uncertainty for the company in the coming years, and that's the reason Street is worried about this, and that's the reason you're seeing this type of reflection on the stock price, which is down by around 20%.
All right, thank you so much, Varun, for getting us all those details. Even the company did conduct a con call at 12:30, but even after that clarification, there's been no substantial recovery, or rather no recovery on that stock, and still locked at a lower circuit of 20%.